Well, President Obama and his first family donated 14% of their income to charity last year. That's according to the president's 2010 tax returns. They were released by the White House this week. The family reported a gross income of some $1.7 million. That's actually down from $5.5 million in 2009. Book sales probably accounting for a big part of that back in 2009. Now, of the charities the Obamas gave money to, the Clinton Bush Haiti Fund and the Boys and Girls Clubs. Well, now, as it turns out, giving away charitable donations is actually a pretty good strategy for keeping a larger part of your income and not letting the IRS have all of it. And Steve Sexton joins us once again this morning, the president of the Sexton Advisory Group. Normally our Money Minute expert here, but this is going to take a little more than a minute to explain, I think.
Yes, a little bit more.
Okay, so talking about charities and giving money away.
Okay, well, first of all, with me, a lot of people don't know this, but about 4.5 years ago, I went through colon cancer. And one of the nice things with the surgery and the chemo and all that, I saw many people helping out others that were in charities. For example, there was groups that brought wigs to people, women that were going through breast cancer. There was chemo buddies that drive them back and forth. Right. There was people help out autism. One of the biggest things that happens with charities is people don't realize that they can actually give their taxes to the charity. Now, how do we go about doing that? Now, one of the big things that happens with planning, first of all, is there's a big disconnect. And what I mean by that is I have a client, they just passed away in December. They bought an annuity back in 1970 for $55,000. Their one daughter received $580,000 of the annuity, but $525,000 went on a 1099. And with all their other taxes, she paid over $300,000 in taxes. Now, her parents were completely frustrated about that. They were frustrated about their IRA as well because they weren't spending that either. Now, one of the ways to diffuse that is, for example, what we're doing for their daughter is she has a $500,000 annuity, and what we're doing is we're having the insurance company annuitize it over 10 years. And that $53,000 that they're going to give them each year, $6,000 is going to go off to charity. Now, that $6,000 is an offset, so they don't have to pay any taxes on it. The other $47,000 is going to go into a secondary life insurance policy for their kids when they pass away. Now, they picked $1.5 million because they figured that over the next 20 years that annuity is going to be worth $1.5 million. Now, that $1.5 million life insurance plan is going to go off to the kids tax-free. So it resolved mom and dad's problem. They're not giving their taxes to the IRS. They're giving it to their charity and they're giving it to their kids. And the charity wins because they're getting $6,000 a year for the next 10 years.
So everybody's happy except the IRS.
Oh,
and
yeah.
then they can't be unhappy because this is just good planning.
Oh, yeah.
Now, Steve, one of the things, though, as I listen to you talk about this, and again, I'm probably like most people, I follow a good bit of what you're saying, but quite honestly, some of it obviously requires an expert to me. And that's where the Sexton Advisory Group comes in. I mean, you don't expect people right off the bat to come in and have one conversation and then, God bless you, now go about your business and start donating to charity. This is a strategy. You need to work with an expert such as yourself, don't you?
It's very important that somebody understands, one, what's one's charitable intent, two, what's their estate planning, three, how their income flows on their tax return, their income, and all sorts of things. Because people can give to charities just by finding out the problems that they have with their tax return. I have one client, Bill and Dee, they make $90,000 a year that flows on their tax return, but they're only spending $50,000. We used simple things like longer-term investment choices, tax deferral, and tax-free income strategies, and reduce their taxable income down to $50,000 from $90,000, saved them $7,000 a year. So what they did is they gave $3,000 a year to their church, and they're taking the other $4,000 towards trips, and they're going to Australia this year just because of that. So
now you've got another workshap going on tonight, right?
Yes, I am.
Okay. You got room for more folks? Because people are sitting there right now going, okay, I think I follow some of what he's saying here, but well, I want to strike while the iron's hot, and I want to get in and see Steve and actually figure out how these strategies might work for me.
Yes, we do have another workshop. It's at Hunter's Steakhouse. It starts at 6 o'clock tonight. They want to give our office a call at 1-800-560-2611 and talk to Jeannie. She'll get you scheduled up. There's a meal there, so there's some options for that meal, so she'll get you all hooked up.
I'll say, okay, Sexton Advisory Group, it's tonight, Hunter's Steakhouse, and there's the number on your screen, so let's leave it up there for just a second here. Is it a good idea if husband and wife are both living to have both of them there and have a discussion between the two of them about strategies, because it's pretty obvious that barring some kind of a tragedy, one is going to outlive the other. So shouldn't they get together now if possible and have husband and wife come to this seminar?
Oh, yes. You want to have husband and wife there because you know what? Your wife has different concerns than you do.
Sure, exactly.
And they're going to have different questions. And I'll too often, I've gotten information from my wife and she's asked me questions like, I didn't think about that.
Right. And one of the more tragic things is when a husband passes away and maybe he's been the one taking care of all the finances, or in my case, my wife handles most of the finances, and the other one that hasn't been doing the money work here is left behind. They don't have any idea what's been done up to that point.
Well, you know what? In that situation that happens far too often, it's very important to go to one of these types of workshops to understand how to organize, prioritize, and then take control of your own situation, because you know what? Having to make all those financial decisions is just overwhelming.
Yeah, especially after the loss of a loved one, you don't want to do that. You want to look back and say, thank goodness we planned ahead and don't have to deal with that kind of pressure now. All right, Steve Sexton, the Sexton Advisory Group, get the information on that workshop and get to it tonight down at Hunter Steakhouse down in Mission Valley. For more information, as always, you go to san diego6.com and you just click on San Diego Living.